This is Danny Gould with the Selling Silicon Valley Group. Welcome everyone to your very first Silicon Valley snapshot of the new year. Happy New Year, everyone. 2020 is upon us, and very, very excited for how this year is starting off. If you're a home seller here in Silicon Valley, you should be extraordinarily excited. And we're gonna get into some of the numbers and some of the heat maps and some of the data. But what I wanted to start off with is just a reminder of how we finished off last year. If you've been watching these videos for any period of time, by the way, today, if you've been watching with us since the beginning, this marks the 1-year anniversary of when the Silicon Valley Snapshot started, when we were due on a consistent weekly basis. And so, thank you to all of you who have supported from the beginning, and for those of you that have hopped on along for the ride since then, thank you as well for joining. So let's get to it. Let's talk about how things have progressed here in the last 2 or 3 months or so. And if you've been watching these videos for any period of time, you will know that I've been talking about the idea that selling your home in January is the optimal time to be selling it if you're a home seller in 2020. In the totality of 2020, my money's on January. I think it's very interesting that this article popped up on CNBC. I'm not sure if any of you have seen it, but I wanted to share it with you to start off the video, to give us a little bit of a tone heading into the rest of the data that I'm about to share with you. Let's hop into it. So CNBC, the headline reads, and I scrolled down real quick and didn't plan this as well as I should have. So kudos to me, right? Competition for housing is so high, the spring market is starting now. This is January 2nd, 2020. Diana Olick, you're a smart woman. She is. Competition for housing is so high, the spring market is starting now. Let's read some of the key points because they're important, okay? Now remember, this is a national article. This isn't exclusive to Silicon Valley. This is the national article. Spring has historically been the busiest buying season, but as competition for homes heats up across the country, January is the new April. Wow, it's like I said that before or something. But from 2015 to 2018, the peak month for average views per listing on Realtor.com was April. January lagged by a full 16%. In 2019, however, January was the busiest month on the site in 20 of the largest 100 metropolitan markets. Okay, great. So those are some key points, right? I think the one that we really want to pay attention to, however, is that January is the new April. And why are they saying that? Why are they saying that? Well, let's conceptually from a market perspective, when we think about homes appreciating, right, we think about competition versus supply, right, or overall demand versus supply, and for the longest time, the spring market was the time to capitalize on that difference, right, on that delta, because there was far more demand than there was supply. However, what we've been experiencing, and not just in Silicon Valley, but or not just this year rather, but over the last couple years here in Silicon Valley, we've been experiencing, in some areas, not all areas, this idea of the competition being so low in comparison to how much demand there is at the start of the year, that the market has ramped up. And while it's ramped up to a certain degree over the last few years in this time frame, last year was kind of a weird year to begin with because we had we had so much more inventory than we did demand in the beginning of 2019. Kind of lost sight of the overall trend and where the market is heading. But now this year, we seem to have gone back to that. And so when we look at the data, we look at the maps, and we look at the charts, keep that in mind. Because if you're a home seller here in Silicon Valley, what you need to be cognizant of is that this is a very reactionary market. Home sellers especially pay pay attention to what's going on in the market, but they don't pay attention in real time. They're not watching the Silicon Valley Snapshot. I only have 2,000 people subscribe to this via email and online. There's only 2,000 people getting the real information. Everyone else is going to be subject to the Mercury News, which is historically 2 to 6 months behind the 8 ball. So we have roughly 2 months before the data that I'm about to show you becomes public knowledge. Keep that in mind. Okay, so let me switch screen. We're very, for being as tech savvy as I am, we've talked about getting a green screen. We've talked about doing that, and some things are in the works. So we'll eventually up the game on this. But for now, this is what we have to work with. Just a good old screen, okay? So, things to pay attention to. For the first time, remember, in December of 2019, 1 month ago, for the very first time in 18 months, we had more pending sales in both the condo and townhome sector plus the single family sector than we did active inventory, right? So for the first time in 18 months, we had more demand than we did supply overall in the marketplace. A few weeks before that, single families flipped the switch, and then shortly thereafter, condos and townhomes flipped the switch. And the reason that these tables are so powerful isn't because on any one given week we get all the information. The whole point of this is to look at the trends, to look at 2, 3, 4 weeks or more of trends and see what's coming in the future, right? You can predict the future by looking at what's going on in the current trends, right? And so keep that in mind as we look at these stats here. Now, of course, these are the New Year stats. I don't have the last year's stats, but if you've been watching these videos, go back a few weeks and go look at the Santa Clara County statistics for December of 2019. You'll see that this number is growing. The delta between these numbers are growing, and the delta between these numbers are growing. Think about that. There's 44 more pendings than actives in the single family sector, and there's 42. And a few weeks ago, the condos and townhomes, there was still about 100 unit difference. And so let's compare it. So remember, guys, and this, it's also important to look at this too. Look at these numbers, because when you see the heat maps that I'm about to show you, what's going to happen is you're going to see a lot of red on the actives and you're going to see a lot of black on the pendings. And what you need to remember is that we're comparing it to last year. And so last year we had a very abnormal start to the new year. And what fed into it, what was happening at the end of 2018. And so right now, when you're looking at these numbers, remember, or when you're looking at the heat maps, remember that it doesn't paint the full picture. That's why we accompany these statistics along with the heat maps. And I'll show you that in a second. But another thing to keep in mind is that I always talk about 2016 being the banner year. Well, we no longer have 2016 statistics to look at on this nice little chart here. 2017, however, is still here. And what happened at the end of 2016 fed directly into what is happening or happened in 2017. And so let's look at that, and let's look at how that compares to 2020. So 447 pendings compared to 413 actives. We now have 612 in 2017 compared to 493, okay? So the difference there is far greater. What does that mean? Well, that means this, that in 2017, we started off very well if you're a home seller in Silicon Valley. And I don't know if you guys remember, but I certainly do. The spring of 2017 was incredibly frothy for home sellers in Silicon Valley. Why? Because we started off with a huge degree of separation between the pendings and the actives. Guess what? 40 is way less than 100, okay? That's about 40% or so. So, obviously, statistically speaking, if you look at the likelihood of the acceleration that we're going to experience in the next couple weeks, or the next couple months here in Silicon Valley, the likelihood, if you think about the likelihood of that acceleration continuing on into the spring market, March, April, May, sometimes June, like it did in 2017, you're incredibly misinformed. This is not going to be the market of yesteryear. Well, not yesteryear, because yesteryear was garbage. Of yesteryear. It's not going to be that. This is going to be a quick rise and a very steady, stable market for the rest of the year. That's how it's going to be. And when you look at what's going on in the condo and townhome sector as well, it's pretty much the same thing, okay? Now, the demand is still there. You know, there's more demand in 2017 than there is right now. Why do you think that is? Why do you think that is? I'm really curious. Well, number one, there was more inventory as well in 2017, but why do we think that is? Well, I'll give two ideas. I'll give you two concepts to kind of mull over the next couple of weeks here. Consumer sentiment overall in the marketplace, buyer sentiment in particular, as well as one other thing. I'll give you a second. The election. And that kind of ties into consumer sentiment as well. I think there's a lot of things on people's mind right now that are extraneous, that maybe have them in a little bit of a gridlock, right? And a mental gridlock. It's causing great indecision. But here's the thing I know about indecisive people. They follow the herd, okay? And what's going to happen is that these indecisive people, okay, they're going to see what happens in the next 8 weeks, which is a huge surge in inventory, and not a huge surge in inventory, but a huge surge in home prices. Not a huge surge, but a surge in home prices. A surge in the market activity. And you know what's going to happen? They're going to want to buy a house. They're going to want to buy a house because it's what Jimmy and Sally are doing next door. Right? And so because Jimmy and Sally bought a house, well, now they have to as well. And that is going to play itself out real fast. It's going to happen all at once. It may even cause some weirdness in terms of like the overall, what happens to the market. It could mean like a mini 2018 where we, just in a couple months. But I do expect that to happen. And for those of you that are watching this right now, it's like, God, you have an opportunity, and if only you saw the opportunity, you could take advantage of it. Well, guess what? You're seeing the opportunity, but it's up to you to decide what you're going to do with that information. If you're on the fence, don't follow the herd. Be ahead of the curve and save the money. Because the same home right now, in 6 months, will be roughly 5% more money. Or more, depending on the area. That's what's going to happen. We have a lot of, people forget, we have a lot of artificial appreciation to recapture, everyone. We had a lot of appreciation in 2018. We had a ton of it. And then the market came down a little bit. Well, guess what? People don't forget. The market said that that's what those homes could be worth. We have a lot of appreciation left to recapture, everyone. Don't forget that. Because that, in and of itself, should scare you. Think about the home that is on the market right now and look at what it was priced at, or look at what the comparables sold for in the spring of 2018. That is what the home is really worth. The market just needs to catch back up. All right, cool. So, a couple more things to think about, everyone. Active listings in the South County. I don't talk too much about the South County right now, but I did want to, I've been getting some requests for it, so here we are, -14, -3. Now remember, not much to look at here on the active side because of the fact that we're comparing it to last year's numbers. But it's important to look at these because this is what's going to happen, and I'll leave you with this. Is that over the next 2 months, the numbers here are going to begin to neutralize. And what you're going to see is these numbers. Here, I'll come over here to these numbers here. You see, this heat map is all red. I mean, it is all red, right? With the exception of a very, +7 and +12, but it's all red. Well, guess what, everyone? In about 2 months, we're going to even out because there was a whoop in active inventory and then a zzz and the evening off, right? Remember last year, the velocity of the market was far lower towards the end of the year when we were comparing it to like other years. The velocity meaning this number right here. If you guys are, this percent increase, right? That's measured at the beginning of the year. That's measured at the time of measurement rather, versus the inventory at the beginning of the year. In 2019, it was like 100 and something percent. In 2018, it was like 300 or 400%, right? So we had a huge increase in active inventory in 2018, and then in 2019, so I might have like mixed those up, but in 2019 we had an evening off there towards the end of it, right? And so the inventory levels are going to come back down, or are going to reflect last year's coming back down, and the year-over-year heat maps are going to even out, right? They're going to be closer. They're going to be in the 1-digit range either way, and that's how it's going to be for a long time. Okay. Everyone, that's pretty much it. I mean, look, pendings, again, these don't tell you too much. I like the pending ones a little bit more because it measures, market activity in certain areas. I would say, look, if you're a home seller in the outskirts here, where your homes are significantly more money as compared to the median home prices in Santa Clara County, you should be putting your home on the market today. We really should, because the longer we wait, the higher the chances are of the market not being in your favor anymore. And that I hope you understand why that is, just based off of seeing this. And if you don't, then reach out to me privately, and I can walk you through it. But look, there are still some areas here where the pendings are not where they were last year. That's also gonna play itself out, okay? Because a lot of these buyers that are on the fence, they're coming back into the market. And finally, here we have our pendings in the Mid-Peninsula, and what we have to pay attention to here is, this concept of what happens in the high end eventually trickles down to the rest of the county. Let's pay attention to this because over the next few weeks, we should definitely gauge how, especially Palo Alto and Los Altos are doing, because those markets tend to reflect on what's going on in the rest of the market. And if the pendings continue to be in the negative, that might not be the best news for the county. But for right now, everything's looking really good for you as a home seller in Santa Clara County. You buyers out there that you're watching, because I have a lot of buyers that watch this, use this information and run with it. There's already tales in my office of 20, 30 offers on properties. That's only going to get worse. So, either overpay now by 20, 30 grand by 1 or 2%, or overpay in 6 months by 5 to 10%. Choice is yours. You missed the boat. I told you 2 months ago to buy, and you guys didn't listen to me. Some of you did, and to those of you who did, mazel tov, kudos to you. But for those of you who didn't, now's your chance again. And take this information, take this knowledge, and run with it. This is Danny Gould with the Gould team. Excuse me. This is Danny Gould with the Selling Silicon Valley Group. We're selling Silicon Valley, and I will catch all of you in the next Silicon Valley Snapshot.